I'm not quite sure what the level of understanding is here tonight, so I'm just going to talk. In fact, what I've got, how long do I talk for?
You got as long as you need.
I can talk. You know what I'm going to do? What I've done is I've split my presentation into two sections. The first section is where we are now. I felt it absolutely necessary to actually talk about where we are in the world today, where the South African market is. And the reason is that I've just come off radio now, and Siki asked me, she said, please explain why our market hit an all-time high today, and yet the economic data that we're getting now is so awful and so terrible. In fact, today motor vehicle sales were down. We know that NUMS has gone on strike, and also the PMI, which is a measure of manufacturing, it's a measure of the manufacturing outlook, is still contracting against the rest of the world, which is starting to repair and do well. So how come our all share is at an all-time high? So I've got an explanation here. Not everybody's going to like it, and I have to tell you from the start, I'm the messenger. Okay? And what I mean by that, and it's dead genuine, we look after people's money. Okay? And that's my job. I look after people's money. And it's for me to put that money where it's best served. Where in the world is the best place to be? Which are the best companies to buy? That's what we do. So we don't get, or certainly I don't get loyalty points for investing in South Africa. Okay? You understand that? So we look at economies, we look at companies very objectively, and we make decisions accordingly. So sometimes you don't like the message, you don't like what we have to say, but this is the truth, this is how it is. So that's the first part. I won't be long. I'll do it rather fast, except I can't see what I'm talking about. I have to turn around and that because I don't know my slides off by heart. The second part I think you might find very interesting. I've tried to bring Buffett in. I'm a big fan of Warren Buffett. I go across to Omaha every year. I've been going for 8 years. And I've come back with, I always come back with a little bit of wisdom. So I want to try and get past the first part first. You'll understand the second part pretty easily as well. So I will be rapid. And if I run out of time, then I'll just speak every second word. So you'll just, let's do it. Okay. So I've called this the Great Trick. And the reason is, you know that in the last couple of weeks, we've had a downgrade by the S&P. And I apologize if I have to turn around and look at my slides just to get an idea of where I am. But the most distressing part of the downgrade was from S&P, where they said the reason that they downgraded us was our poor growth over the past 5 years, increasing social needs, power constraints, and then questionable leadership. What they said, and what both Fitch and S&P said or hinted at, that the people in charge of the South African economy or in government were not strong enough to actually lead us to where we should go. That's their biggest fear, and that's something we have to address. In other words, the people in operation are not strong enough, and that hurt most, or that's something that we have to focus on. The rest we know about. The economy contracted, platinum strike. The platinum strike cost 10.6 billion, according to the miners, in wages that were lost, and it cost the miners themselves 24 billion. Now there's a multiplier effect. That's just the pure cost, because what you also have to understand is that when people get wages, they spend those wages. They go to ShopRite, they go to the chemist, they go all over. That has an effect, a multiplier effect through the economy. The same with the platinum mines, as they get money for the sale of platinum, they export it, we get foreign exchange coming in, and they spend it, they give it in tax, etc. So while these are the pure numbers, the effect on the economy is much greater than that. And of course we know the manufacturing output negative, trade deficit widening, and so on. But it's the S&P downgrade that is the most distressing. Just on top of that, so while the platinum miners are going on strike, there's another aspect that no one seems to be concerned about, and this is a metal index. So it's a reflection of where commodity prices are in the world today. And you can see that we've dropped. In fact, I haven't got back too far, but you can see we've dropped from 2011, the height there to where we are now. So that's iron ore prices, copper prices, coal prices, a whole bunch of commodities you can see has come off. And what's it come off with? As China has stopped importing. As China has stopped its programs and is shifting its economy from a fixed investment type economy to a consumption type economy, the demand has lessened. Yes, growth has gone down there from 10 to 7.5%, which is still very robust, but it's the composition of that economy and where their demand that is hurting us. And this worries me more, because what's happened is that more supply is coming on, and it means if prices are going to remain low, the mines that exist and are operating are going to have to mine a lot more efficient and a lot more a lot more productively. And what are we doing? We go on strike and demand higher wages, etc. So my big concern is how mines can survive against the backdrop there that we're seeing there of lower wages. Yeah. So what does President Zuma say in his State of Union address? He says, the low level of investment is a key constraint to economic growth. We are determined to work with the private sector. In other words, we want to work with business to remove the obstacles from growth. But it could be too late. Why? Because years of anti-business rhetoric, years of uncertain policy direction. We're reviewing the mining charter again. What does it mean? Tell us which direction you're going. Businesses like to plan over 10 years. They like to know tax policy. They like to know where they're going 10 years' time. You can't keep changing it every second. Maybe we're going to take 50% of the farmers' land away. Maybe we won't. Who knows? So until you've got a clear policy direction, it's going to affect business. Onerous labor legislation. We see how easy it is to strike. Burdensome transformation demands. The one thing businessmen don't like to know. They don't want to be told who their partners are going to be, and they don't want to be told where they've got to buy things. They will come here, they will invest in the country, they will start factories, they will pay taxes, they will employ people. But don't start fiddling and telling them who their partners must be. Limited energy supplies and skill shortages. And what is all of that doing? That's pushing companies away from South Africa. That's why I've called it. I know it's a horrible, I know that you're starting to squirm already, but it's pressing companies. It's pressing companies to go out. And just look what's happened over the last couple of weeks. Woolworths. What is Woolworths doing? It's making a 23 billion rand purchase outside of South Africa. It's trying to buy David Jones, the iconic department store in Australia. What happens if it does it? Yes, it'll be 35% of Woolworths' market cap. So it means that here's a South African company which is going to have a massive investment outside of South Africa again. This is recently. It's one of them. Sasfin. We know Sasfin. What's Sasfin doing? It's got this $21 billion deal that it's considering doing in the state of Louisiana in the United States. It's an ethane cracker plant and a gas to liquids plant as well. 21 billion, 210 billion or more, 222 billion rand. This will make up 50% of Sasol's market cap. It's already doing a lot of deals. But what does it mean is that if it does this deal, Sasol will start to have more and more of its operations outside of South Africa. Mediclinic. 5 years ago, Mediclinic ran hospitals in South Africa. Today, 65% of Mediclinic's revenue is coming from outside South Africa. It's just last week, it announced the deal of a further purchase of a hospital in Switzerland. It's already doing it. It has operations in the United Arab Emirates as well. So 65% of its revenue now is coming from outside of South Africa, whereas about 5 years ago it was close to zero. And then Steinhoff, a furniture manufacturer here, announced last week that it's transferring its primary listing from the Johannesburg Stock Exchange to Frankfurt. It still will have a listing here, but its primary listing, it will move its head office from Stellenbosch to Frankfurt. Why? Because it sees greater opportunities in Europe. So what's happened, you can bet that its focus now is going to be on outside of South Africa in Europe. And this is just one of many. I'll go through all of these. This is from recent results. So this is not me talking. This is exactly what's happening at the moment. ShopRite, turnover supported by strong growth elsewhere in Africa. Imperial, AECI, Victor, last week, the group is focusing on international growth, aiming to increase non-South African income to 50% in the medium term. Victor, their aim to get 50% of the revenue that they earn outside of South Africa and so on. Basil Reed, construction company right at the bottom there. To offset the weak local conditions, the group is targeting further expansion into other African countries where significant opportunities exist across all divisions. So these are actual quotes from the results. So let's look at the JSE today. If we look at the composition of the JSE, the top 15 shares make up 70% of the market cap. The market cap is about, I think, 1 trillion. What's it? $1 trillion, yeah. About 10 trillion rand. So 70% of that is in the top 15 companies. But have a look at the top 15 companies. Have a look at this chart. I hope you can see it. British American Tobacco, the biggest company, 1.3 trillion. No business in South Africa. It doesn't do business in South Africa. SAB Miller, 1 billion. 20% odd in South Africa. And so on. Glencore, Billiton, Richmond, Naspers, MTN, Sasfin, all Anglo-American. All of those companies are based outside of South Africa. So, in essence, the JSE is actually reflective of an international indice rather than reflective of South Africa. So it's more of a reflection of what's happening outside, and we're coming to the reason why the JSE is at an all-time high while the South African economy is languishing. Simply because the companies that are traded on the JSE are benefiting from what's happening outside of South Africa. And so we go on. Right at the bottom there, number 15, is Barclays at 136 billion. Which is what 1/8 the size of British American Tobacco. And that's number 15. So you can imagine what comes down underneath beyond that. What's tragic though is if we look on that right-hand column there, if we look at our platinum mines and gold mines, and everybody thinks that South Africa is a miner. We made up of platinum mines, we made up of gold mines. The market capitalization of our platinum mines and our gold mines together are no bigger than Sasfin. Together equal Sasfin. So you can see how far down the line we have plunged, or how far our platinum miners have plunged down the line. In fact, those gold mines, most of the operations are outside of South Africa as well. I think the only ones are a little bit of Harmony, Sibanye, and a bit of Anglo Gold and so on. So of our gold mines, I think probably less than 50%, and I'm guessing, are in South Africa. So you can see how far we have fallen down. So the JSE is made up, in fact, if you know what it is, it's right at the top there. British American Tobacco are smokes, booze, and luxury goods. That's what our JSE is actually made up of. And a little bit of media. And don't forget MTN. Please keep using your smartphones. I'm invested in MTN and Vodacom. Okay, so, and this is another distressing factor. This is a breakdown of our top 50 shares. They make up 90% of the JSE. And if you look at that chart, that big blue is the global exposure. In other words, those are dollar-based companies. Companies that either sell their product for dollars and are dependent on the overseas investment, in other words, on overseas buyers like our platinum mines or Kumba iron ore and so on. Or alternatively, they're made up of those big companies with operations outside of South Africa, like British American Tobacco Breweries, Richmond, and so on. 77% of the top 50 companies, 90% of our market, 77% of it is dollar-based, which means there's very little left there. Of the balance of 23%, most of that's financial. Banks, services companies like Old Mutual and MMI, Liberty Holdings, which sell financial products. Telecoms, 2%, retail, 4%. Retail, I've included the broad-based, little bit of property. What you don't see there is manufacturing. There's no manufacturers there. There are no producers in South Africa. You might, I think Tiger Brands might have been included, I think, under retail and etc. But you can see how the composition of the JSE has changed and how we're starting to see the shift out of South Africa. So that's the JSE. Great chart. From bottom left to top right-hand corner, keeps going up. We're close to 52,000 now, etc. And on the left-hand side, I've given some of the shares that are up this year. Steinhoff, Naspers. You know, if you would have bought Naspers a year ago, you're up 82%. Aspen, 73%. It's not all. There's a whole lot of others that are recovery stocks. And on the right-hand side, those shares that have gone down, African Bank, down 39%, and so on. Another point as well, and this might be a little sophisticated and difficult to understand, what's happening as well, we are seeing a number of shares that are starting to outrun themselves and get expensive. They don't form part of the index. You know, they're not really index movers. They don't move the needle, but a lot of shares, the weight of money that's coming into the market is pushing up the shares. And I used Investec as a proxy, you know, only to give you an idea of that. And the blue line there are the earnings of the company. And you can see that over the last 5 years, the earnings have been flat, and yet the share price has gone up, which means markets rating the shares upwards. So even though the earnings, back in 2009, you paid a lot less for R1 of Investec's earnings than you are today. Today you're paying a lot for Investec's earnings, etc. You can see what's happening. I can use the same chart for a lot of shares. So it's also a feature that is spreading through the JSE. The weight of money, lack of stocks, prices are continuing to go up. So what's the upside and the downside of the business that I've been telling you? First, the upside is that it offers local investors high returns in fast-growing regions. So if you're an investor, this is great. The JSE is a wonderful place to be because it's offering you this exposure to offshore. You're diversifying your regional risk, and of course, it reduces your exposure to an underachieving economy. You know that the economy is growing at projections are that it's going to grow at maybe 2% or thereabouts, or a little lower. The downside, though, and this is the worrying feature. The worrying feature of this whole thing, the thing that we should be focusing on, is really we are creating, by companies moving and investing there, we're creating employment in other areas. We're creating employment in other countries. What happens when you create employment? You start a business there, procurement takes place there, services are used there. So you create economic activity in countries. So even though we're benefiting, we're getting the dividends coming up, we're getting share price created, actual economic value is being created outside. So what do we need to do? Of course, I don't have to tell you. You know, what do you want to do to keep companies here? There's the list. Tackle crime, corruption, service delivery, consistent policy direction, protect property rights, tame labor unions, and defer ideological transformation. Worry about that later. Let's get growth. Let's get this economy going. Worry about politics later. So while I'm giving you this background, in the meantime, the rest of the world's repairing. Things are picking up. As I came today, if you would have looked today, China's PMI, in other words, its manufacturing output is improving. US doing pretty well. While we're below 50, in other words, we're contracting, the US is gaining, UK gaining, Europe all gaining, all in positive territory. positive sentiment reading in Japan today was one of the big reasons that our market surged today. As Janet Yellen said last week or a week before, she said accommodative monetary policies, rising home and equity prices, and the improving global economy should fuel above-trend expansion in the US. So we're starting to see the pace of the UK economy growing. In fact, their PMI was 57. UK is flourishing, and we're seeing the first signs of a turnaround in Europe. Europe itself is starting to look good. In fact, the L'Oreal, we all know who L'Oreal is, the cosmetic company. Their CEO in an interview last week said, Europe is back. In other words, it's the first time I've heard this. Europe is back, meaning, he said in the UK and in Germany, demand was robust, but they were even for the first time in 6 years seeing demand pick up in Greece, Italy, Portugal, and Spain. And that. So Europe is now starting to awaken. The only danger that we do face is what Bill Gross, who's a very well-known fund manager, calls a new neutral. The only danger is that the world is still heavily indebted. And that's from the indulgence that we saw in the 90s and the 2000s, where credit was easily available. So householders are full of debt still, governments are full of debt. You know, this all manifested itself in the crisis that we saw in 2008, and that still has to work through the system. And that's going to take a long time to work out the system. And as long as that is still overhanging, interest rates will be low and growth will be below levels that we've seen before. So that is a negative. So we're starting to repair, but we're not going to repair at levels that we know in the past. Also, we're getting aging population in Europe, Europe, America, and Japan. And of course, we're starting to see workers displaced by technological revolution. That all means that there's a disconnect between the growth and wages, and it's a big thing that's dragging down in America. We're not seeing the wage increases that we want, or the kind of employment we want that bothers Janet Yellen. But it's structural. It's going to take a long time to work through the system. So while that's happening, we're going to have low interest rates and lower growth than we're used to. That in itself actually weighs on growth, because it means that you either have to save more or spend less. Either save more or spend less. And if you're going to spend less or save more, both of them have the same effect on the economy, holding it back. But still, it just means that the trajectory of growth is going to be a little lower. That's a lovely map of the world, because what that shows you, I've gone much longer than I wanted to, so on this particular subject. But that gives you an idea of what the world looks like economically. So the big blue dots on the left, of course, that's America. That's how big the economy is, and that's Europe. And that's why it's so important for us to have America and Europe growing and growing strongly, because that's the effect that they have. You can see the big green dot at the right is China, and that gives you an idea of how big Russia is, India, Brazil. You can't even see South Africa. We're at 0.6%. Australia's there as well. So we need Japan, as well as another blue dot on the right-hand side, not doing much. Japan attempting to come right. It's too complicated to discuss, but it does give you some kind of idea of why we need America and Europe so badly in that. And together they make up 45-46% of the global economy. This will be the last slide that I'll show you on this thing. So what's shaping markets? First of all, the global economy is coming back, growing beyond the claims of central bankers merely. There were all those cynics who said this is just being driven by central bankers printing money. We're growing beyond that, and that's certainly shown in America. The other thing is what we call what the frack. I think this is a big subject. I'd love to spend more time talking about it. But the shale boom that we're seeing in the United States is going to change energy policy into the future. America, within the next few years, will be self-sufficient in energy. In other words, producing, instead of being an oil importer, will actually be able to actually export energy. Gas prices are bringing down electricity costs in the United States. It's a game changer, and it's making America into a very, very powerful subcontinent. And you know how Americans are. They like to live within themselves, and it's going to change the whole geopolitical balance as well. If America doesn't need the oil-producing countries, one's not quite sure how they're going to treat them. I don't think they will ignore it. They want to still remain the policeman of the world. But America, cheap oil input, cheap energy input, is bringing manufacturing back to the United States as well. So while our electricity prices are going up, in America they're going down. And they cook with gas. They use gas for heating. The other thing is that they're converting a lot of their power stations from coal to gas, etc. It's a big subject. I can't spend too much time on. Goodbye Yellow Brick Road, emerging countries, emerging economies under pressure. The reason is that they're underperforming, harmed by faltering reform programs and slowing commodity demand from China. The whole BRIC thing has fallen down. We know what's happening in Brazil. You only have to read the Argentinian story today and so on. So emerging markets, one of the reasons that emerging markets disappoint is that they don't know how to use or turn opportunity into growth. Dragged down by too many issues, political, structural, lack of skills and so on. But the big story is that the middle class in some of these emerging markets are rising. We see it in India, and we know it's happening in China. As those economies get richer, so their demand will continue to increase. Demand for motor vehicles. You know, on average, I think in Europe, there are 500 motor vehicles for every 1,000 people there. I think in China, it's 50 per 1,000. So there's massive opportunity to grow. In fact, motor vehicle demand in China grew by 16% last year, and it's growing. Airline, people are traveling more, so the demand for airline and aircraft is increasing dramatically. And there are only two aircraft companies that can produce, that's Airbus and Boeing. So there's a massive demand, and also, as fuel efficiency increases, so you need to improve your carriers, your aircraft. So you can't have old aircraft, it costs too much. And of course, aspirational brands. We all know as people get richer, as they move to middle class, they want aspirational brands, they want LVMH, they want Prada, they want Rolex watches, they want to wear Adidas, Nike, you name it. And so the demand for those is increasing and presents a huge investment opportunity. Africa, don't ignore Africa, growing 5.5%, accelerating, 1 billion people there. It's going to be another big opportunity for investment. And then there's tech. We haven't even started to think about how tech is going to change our lives. And the one thing about tech, it doesn't grow geometrically, it grows exponentially. And things are happening now that are going to change the way that we live and that we think. Artificial intelligence, 3D printing, robotics, and of course we know how smartphones are the remote control to our lives now. And they're going to change as more and more is done on the smartphone. So to embrace those, these themes is the way that we're starting to look forward from a global point of view to the market. So I've listed here, you can have this here, I've just listed how we transfer this or how we convert this into investment themes in companies that are expanding offshore, emerging market consumption, and so on. And then, of course, if you want to invest overseas, some of the names as well that we invest. But we convert that into an actual thing. Shane, you can have this here if anybody wants to read that list with the greatest of pleasure. I've gone a half an hour, it's a lot faster, a lot longer than I wanted to do. So, have I? Yeah. If you want me to shut up, I will now. But I want to go on to another theme. If you want to ask any questions, is there anything that's bothering you about this as well? I know it's hard for you to consume and it's very hard to accept. But I'll answer one question here just to get rid of the before I get into bucket, which is a much more pleasant theme.
Right. Thanks. My burning issue is that, okay, you mentioned that we need the Eurozone and America to perform well for us to sort of remain afloat. When, pardon my ignorance on this, but when the Eurozone crumbled, what was the effect of the markets in SA? And are we really saying that down, for example, or to not be able to exploit our own resources and the human capital we have, to the point where we always have to look up to these foreign companies to capitalize on the consumption available in SA, because it shows that we're a consumption economy. How do we produce our own goods and services to maximize the demand?
We're a very open economy. Okay, what does an open economy means is that we export what others want, we import what we need. Unfortunately, we're importing more than we're exporting. South Africa is a blessed country. We've got an array of resources that most people will want. We've got everything. The only thing that messes us up is our people. You know what I'm talking about. In other words, we've got everything. You know, as I say, I look objectively and I say, if you look at, we've got the greatest array of mines. We mine everything, from nickel to iron ore, to coal, to gold, to you name it. We've got perhaps the best tourist attractions in the world. It's a stunning country. We've got everything. We've got the most beautiful golf courses. We've got the most beautiful weather. We've got game parks. You name it. The only thing we do is we don't know how to manage it. And it's not the recent government. It's ever since Van Riebeeck landed in 1652. It's been a mess. You know, wherever you go through history, it's been a mess. And I think that's the problem. It's not the country, it's the people. So we've got to change it. It's not going to be anybody else. You know, and I'm saying, unfortunately, we don't take advantage. We've got some great business people. The one thing I can't fault is the private sector, because they function under the most difficult circumstances. And we know that there are opportunities. So we've got to get business policy right. You know, and that's why I say I come from a backdrop of saying, hold on, I'm a businessman. My wife's family, I come from quite a strong political background. My wife's family was heavily involved in the struggle. In fact, tomorrow, what's today? First. Sorry, on the 3rd of July, 1964, the security police knocked on my wife's family's door, and my mother-in-law was arrested. She spent years in jail, etc. She was a commie. You know, I don't quite fancy commies. I don't know how I ended up with her daughter. That's another story. But we used to fight like that. I mean, my mother-in-law and I. But I'm saying, so I come from a heavy political background. I've got no axe to grind as far as that's concerned. So I look at it, I look at South Africa now as a business proposition. So we've got to get it right. Because the rest of the world don't care about it. You know, if we don't pull ourselves right, if we don't get it right, we don't get labour right, if we don't get our policies right, unfortunately, it's all you people around here, that are going, it's your children that are going to suffer. And it's sad. It's really sad. So if I could stand for president, I would, but no one's going to vote for me. So. But what you're saying is right. You've got to look at, we've got to look at ourselves in the mirror, because we can do it. You know what I mean? We can do it, and we've done it before. So it's a strong message. What I write there is how I see things as an investment house, as an investment person. Now, put out a strong message, because I don't want to be in a situation where you say press 1 for the good news, press 2 for the bad news. Okay, so I think we've literally we're hitting bottom, while the rest of the world is growing 2, 3. Africa is growing 5.5%. We're growing 1.9. Shouldn't be there. Anyway, I think I'll go into Buffett. Then we'll go into that. And I'll be rapid about that, but I'm happy to discuss here the whole night. I can bore you to tears. What about Berkshire Hathaway? Okay. We can all, I'll be very fast about this. But for years, I followed Barron's. First of all, I've been going there for 8 years. But Berkshire Hathaway, Warren Buffett's company, and I'll explain to those who don't know who he is. This is a shortened version of a presentation that I do. In fact, both of these I've combined two into one. Is probably the world's most respected company. Well, I thought it was until I read Barron's this week. It's gone into number 2, knocked down by Apple. But nevertheless, in the survey, Berkshire Hathaway, over the last 9 years that they've been conducting this survey, has only been out of the top 5 once in 2012, and I'm not quite sure what happened there, which is an endorsement of Buffett's leadership and a reflection of investors' esteem, how high people hold him. What is the survey? They look at operating metrics. In other words, they look at the business. They look at the steward of shareholder capital. In other words, how he uses the business, management, ethical business practices, sound business strategy, and his value to society. And on all those measures, he has been consistently one of the top companies. Now, it comes at a time where, if anybody reads newspapers or anybody follows what's happening in the business world, there is a huge amount of criticism against bankers. In fact, I just looked, I was doing a TV show last week where we always have a go with everybody. And Jill Marcus, the salary is 5 million rand. And we were criticizing it. I said, are you kidding? She's underpaid. I said, Jill Marcus at 5 million rand she deserves it. I really mean it. But at 5 million, why are you complaining? Maria Ramos gets something like 27 million rand. Okay? I don't know what Sizwe gets from First Rand or something, but I promise you, it's 3 to 4 times what Jill Marcus is getting. And only if you pick up Business Day this morning, you'll see Stephen Kosser from Investec. First of all, most of their profits come from South Africa, but they pay themselves British salaries. So his salary, and he's a friend of mine. He really is a friend of mine. So his salary is 450,000 pounds or something. It comes, I don't know, to 10 million rand or 12 million. That's his base salary. And he's just going to get a 13 million rand odd bonus over the next 3 years, which will be deferred. 30 million. So it is a big subject. It's subject to a lot of criticism. We all know that Gareth Griffith paid himself 17 million rand when his whole mind was on strike. How can you do that? I mean, it's nonsense. So, while I've had a go at everybody else down the line as well, we've also got to look at some of these salaries that management in South Africa are paying themselves without any sensitivity of what's happening below. So we know politicians are attacking executive pay, and also government challenging this deep divide between the rich and the poor. It's a big subject. Obama addresses it, everybody. This divide between those that have got and those. So how come these two elderly gentlemen, how come they manage to remain one of the world's most respected companies? How come they can rise above this anti-sentiment and that? And how come for the first week in May, 40,000 people, disciples, followers, descend on Omaha to attend their annual general meeting? Why do shareholders trust it? Why is this great trust? And I'll give you a story. In 2009, a lot of all the notes that I make on Buffett are made from my own visits there. I haven't taken them from books or anything. But around about 2009, he spent $45 billion on Burlington, Sandton, Northern Fact. Oh, get it. Burlington, Northern Santa Fe. There you go. Burlington, Northern Santa Fe. I haven't got a scoop in front of me. And he spent $45 billion. I know I might be getting the numbers slightly wrong, but it's in that region. And yet, this was at a time when everybody was worried that the world was going into recession again. 2009, we've just come out of 2010 around about. If it had been General Electric that had bought this Burlington Northern Santa Fe, the share price would have plunged. If it had been any other company, because General Electric are trying to buy Alstom now, which is the manufacturer of rail cars in France. And that. If it had been General Electric, anyone, the share would have plunged. The share didn't do a thing. No one abandoned Buffett. Why? Because they trusted. Now, and what I want to explain is why he has built up this trust and why a man of his immense wealth has this huge following. The reason is, I've put it into some very simple things. But first of all, he treats every one of his shareholders as a partner. And by that I mean that genuinely. Whether you got, first of all, you can't afford a share. Okay. One share costs $190,000. So times that by 10.6 and you'll understand. But you can get B shares which are non-voting shares. But he tried, which are a lot cheaper. But he tried, so you can get into it, you can buy the B shares. But he treats everyone with the same respect. He's approachable, he's touchable. And he writes his shareholder letter. In other words, he communicates with his people as though he's writing to his sister, which is exactly what he did. He writes his letter to his sister, who is financially illiterate. I was going to say illegitimate, but illiterate. So he tells you in very simple words what he's doing with your money as a shareholder, etc. When you're in Omaha and he walks around, he's not surrounded by bodyguards with earphones and those big glasses, etc., with blue lights flashing, etc. He's not like that at all. He's very approachable. You can take selfies with him. His big partner is his fellow director is Bill Gates, and they all pose as they walk around this meeting. Hopefully, I've got some shots that I can show you. It's in another presentation as well. But they're approachable, and the reason is that he believes that everybody, no matter how small your stake is, one of your partners. He doesn't exploit his position for personal gain. In other words, as he drives into his office, he doesn't say, I'm a millionaire now, give me a big office, a secretary, a big motor car, and the company's got a game lodge down in this place that's for me, I'm going to take my family, it's got a wine cellar. He never exploits his position for personal gain. He doesn't take over and believe that he's in charge of the company. He pays himself $100,000 a year. That's all. He admits that when he goes, he's going to have to pay a lot more. In other words, to his successor. But $100,000 is less than just over $1 million rand. That's his salary. He's very critical of income tax laws that favor the rich. And last year he went on this crusade, on this campaign. His rate of tax, okay, not the amount that he pays, but the rate of his income was lower than his secretary, Debbie. In other words, she was paying more of her income than he was paying of his income. And he said it was unfair. Why? Because of some tax loopholes and the way that American tax. And he went on a major, major campaign. Debbie became a celebrity as a result of this. Everybody wanted to interview Debbie. But he went on this and also attracted a lot of attention as a result of it. He takes a stand against excessive executive remuneration packages and expensive buyback programs. He always says that, and this is so true, he says that boards of directors directors pack their boards with Cocker Spaniels, not Dobermans. In other words, the CEO will appoint Cocker Spaniels, onto the remuneration committee. In other words, people who have been paid, who are lapping. You're not a Cocker Spaniel with a waggly tail and licks, etc. Whereas he says you need Dobermans. And he says they would never appoint him because he's a Doberman. To explain it, he says what happens when you have to fix the salary of the person who sweeps the floor on the factory floor. He says it takes 3 weeks. We saw what happened here. When it comes to negotiating the wages of a person who pulls a lever on a machine, 3 weeks. Comes to the managing director, 5 minutes. That's what happened. So he says, in other words, the performance of executives is not scrutinized to the same effect as those people who arrive down at the bottom. And he takes a very strong stand on that. Buybacks as well. You know what share buybacks are, where companies use their money to buy back the shares. So he says, what happens? Executives issue share options to themselves cheaply, and they go onto the market and buy them back expensively. In other words, pushing up the price, or alternatively buying back shares that artificially live earnings. There are times to buy back shares. That's when the shares are trading on the market less than intrinsic value, and that makes sense. But even then, he doesn't want to buy back shares cheaply from people that he regards as his partners. You know, if you're a shareholder, he says he's buying back very cheaply from his partners. The most important thing is that he lives very frugally. He still lives in the same house. I think I've got it on the next slide, that he bought way back in the 50s. When I'm in Omaha, when we drive to, I go to an investor conference there, we always drive past his house when we go to the University of Nebraska Business School, the Omaha Business School. There's no guards out there, open fence, you can drive in. I'm sure he's got someone behind there that's watching, particularly during the week of the annual general meeting. But he still lives the same lifestyle. He drives a very ordinary motor car. He eats hamburgers. He loves his steaks. He drinks cherry Coke. His daughter says she's never seen him drink a glass of water. So his whole lifestyle is really down and basic. And that, you know, particularly, he doesn't need more. And this is the catch. This is the big one. When he dies, he will donate his full wealth, $65 billion. Okay, you want to say that again? $65 billion, which is, I don't know how many billions of rands. All of that is going to 5 foundations. So it's not going to his children. He does not believe in plutocracy. Plutocracy means that the children of the rich should rule society. So he doesn't mean that because you've been born to a lucky womb, you know, you'll come out of a lucky womb, that you should be able to rule society. What he does, he always says that you should give your children enough so that they can do what they want, but not enough that they do nothing. So he's ensured by giving all his money away that future Buffetts will actually have to go out into the world like he did and make a living. So, yeah, it's hard. I know that it's very easy to got rich parents. We all want it. My son always complains that I didn't work hard enough. And he has to work so. But I think it's a very, very important philosophy. I've got some more sayings right at the end as well. And I could actually do a speech on his advice to youngsters only from the notes that I made. So that gives you an idea of it. Who is he? He's 83 years old. His partner is 90-year-old Charlie Munger. He says they're the perfect pairs. He says he can see and Charlie can hear. He says, I love running Berkshire, and if enjoying life promotes longevity, and use it as record is in check. So he's a wonderful man, 90 years old, still full of sparkle. As I say, yeah, there you are. He lives in the same 6,000-foot house in Omaha that he purchased in 1958 for $31,500, now valued probably $750,000. I'm not going to go too much into who he is, and that we've got to cut it short as well. But I've also, this gives you an idea of what makes up Berkshire Hathaway. There you are, Burlington, Northern Santa Fe. But to give you an idea of his performance, I couldn't go back to 1965 when he started his partnership. I couldn't find it far enough. So I went back to 1990. If you would have bought his shares at $7,000 then, today they're worth $190,000. So below, the blue line below is the S&P, and that's their performance. But over the last 5 years, he's actually underperformed the S&P. Simply, it's just too big and bulky to maneuver. So the S&P is actually outperformed. It gives you an idea how he has earned his reputation. That gives you an idea of the meeting. This is Omaha. This is the arena, the CenturyLink Arena, and there are 40,000 people in the arena. I don't know if there's a pointer here. Yeah, there you are. That's where he is with Charlie. There are 3 journalists there who ask questions, and 3 analysts there who ask questions as well, and the audience also asks questions. So I'm just very briefly, the shareholders meeting, which happens the first day in May. A chap said it's like going to church. You know what the message is going to be, but you still go. You know. This quote I took from last year when I was there, and I hope I don't lose it on this audience and that. But there was a chap. He looked like he could have been an extra in The Sopranos, you know, from New Jersey. And he says, people call it the Woodstock for capitalists. It's more like a Grateful Dead concert for the rich. You know the Grateful Dead? No, you don't. Look it up. Just the meeting is a wonderful affair. Very briefly, I won't go into it in great detail. And that he always shows movies. He shows a movie which is a self-deprecating movie for an hour. He's always got some insert there that's based on the current show, soapy. Last year he had Breaking Bad. They didn't make crack, they made peanut brittle. And before he's had Desperate Housewives, he's had The Office, he's had Glee. Always looks like it's on set. He shows a lot of adverts of the companies that he's involved in and so on. And then he answers questions for about 6 hours from the floor. Sits there drinking his Coke and eating Mars bars and so on. And the questions come from the floor and from various analysts, etc. And that's where you get the wisdom. I'm just going to go through these pretty quickly in that, just to give you an idea of him. He loves sound business models and that. He looks for businesses where he can predict where they're going to be in 15 years. And he has some ideas of investment strategy. So he's never bought Microsoft. He won't buy Apple. He won't buy Samsung, because he doesn't know where they'll be in 5 to 10 years. He knows where Coca-Cola will be. He knows where ice cream will be, what Dairy Queen, and so on. So if he knows where, he looks and says, 10 years' time, will that business still be there? He can't do that with IT. He always buys strong management. What that means is that he was asked a question. If you saw a class, if you went into a class of business people, business school, like around here, can you tell who's going to be a successful? He says, I don't have to. He says, because he buys businesses that are already successful. He leaves them alone. He never signs a contract. If he buys your business for $4-5 billion at that, he never signs a contract with you that you have to stay. If you want to leave the next day, you can. But he knows who you are. He knows he buys businesses where the management are passionate about what they do. And therefore, he knows that they won't leave and that they'll stay. So he never signs it. Age is not an issue. I haven't got time to tell you about Mrs. Blumkin. But Mrs. Blumkin worked until she was 103, and she died at 104. And he always tells his manager, you see what happened to Rose when she retired? It's a wonderful story, and he always talks about it. He bought her business, Nebraska Furniture Mart. He walked into her business, he'd been watching it. She was in her late 80s when he bought the business for, she gave a price of $60 billion. He wrote out a check. In fact, the business is worth $85 billion. She never went back on her word. The contract was signed on one page. And she worked in her 90s. She continued to work there. And in her 90s, her grandchildren were beginning to ignore her and keep her out of decision making. So she retired. She got so bored, she came back to work and started a carpet retailer across the road from there. She did so much damage to him that they had to come and buy her out again. And this time Buffett, and she wanted cash. And this time Buffett signed a restraint of trade agreement. She was in her 90s. Management, He leaves it to management. He never interferes with management. He never does due diligence because he said that he knows the companies, and even if things go wrong, he says even if he would have done due diligence, things would have still gone wrong. He has a very positive culture, and he focuses on fundamentals. And he has a very strong message down below. He says that he doesn't understand economics. He says, why spend time trying to fathom out things that you don't understand, like trying to understand. We have so many geniuses here that I come across every day on TV or on the radio, etc., who will tell Janet Yellen how to run America, or they're telling Draghi how to run Europe, etc. And he says, why focus on those things that you don't know? Rather focus on what you do know. And what you can know and what you do know, you can read balance sheets. You can pick up company reports and read, and you'll get more of an idea. And that's exactly what I did in that first presentation. You get more of an idea of how companies are thinking and what they're doing than trying to fathom out economic stats, etc. And that's what he says. Why spend time talking about something you know nothing about, to ignore what you do, what you know about companies for predictions about the economy? You don't know, it's silly. He doesn't like gold. Buffett won't buy gold. He says if you mine all the gold in the world, you'll probably put it in 2 Olympic-sized swimming pools, if that, ever grown. He says, so what do you do with it? He says, a bar of gold today is still going to be a bar of gold 10 years' time. So what are you going to do? Lick it? Stroke it? Polish it? What can you do with it? He says he likes productive things like farmland. At least on a farmland, you can grow mealies or corn or whatever, potatoes. So he likes companies that produce. And he doesn't buy commodities as well, because commodities, you buy commodities so you can sell them to somebody else at a higher price. There's no business schools hates business schools. Because you teach people all the wrong things. You teach them to value options, and you teach them algorithms instead of teaching them how to look at what a good company is, etc. Him and Charlie, accountants hates accounting. He says there are many ways to cheat in accounting. And shareholder activists as well. He says the unspeakable in full pursuit of the uneatable. That's a line from Oscar Wilde. Hate stockbrokers. Wall Street is the only place that people ride to in a Rolls Royce to get advice from those who take the subway. Directors, we've done all of those, buybacks, share buybacks, etc. I'm just going to give you a few quotes of his here. I'll pick them out as well. He always says, you don't need to be clever. You don't need to be that clever to understand or to buy a good company or to be able to recognize a good company. He says, all you need is an IQ of 120. He says, what happens is that the world is full of people with IQs of 150 who believe that they have to show off. He says they should sell for 30 points. This was great. This was last year. He had lent money to Harley Davidson as a loan. You know Harley Davidson? We all know what a Harley Davidson is, etc. And someone got up in the audience and said, how could you lend it to a company like that? And his response was, any business that gets customers to tattoo adverts on their chest can't be a bad company. He said, that's on the back. I couldn't do one on the chest. Here you are. I'll end soon. People ask him they always ask him about his family life, and he always says the success or the answer to a successful marriage is low expectations. Okay? But he says a friend spent 20 years looking for the perfect woman. Unfortunately, when he found her, he discovered she was looking for the perfect man. And this is it, no matter how great the talent or effort, some things just take time. You can't produce a baby in 1 month by getting 9 women pregnant. Advice to children. I'm going to leave it there. I've taken an hour. I promised to do 40 minutes. I'm sorry if I bored you or overstayed my welcome, but thanks for being attentive. No one looked at their cell phone, or I couldn't see anyone looking at their cell phone, so it's always a good sign. Anyway, thanks very much. I think if there are questions, I'm very happy to take some if you want to on anything that I've said or Buffett or etc. But thank you very much.
I read.
No political.
Yeah, there's a chap like in Money Web. He writes the Money Whisperer. I don't know if you know him. He's against Buffett and
he's against Buffett.
Yes, he always talks about or people who go to Buffett like spend. So I just want to know what do you take out of that.
I think that was Magnus Hastings.
Yes,
and he picked up. You know what he did? He picked up a comment that I had made on the radio when I came back. Was there was nothing fresh that Buffett had said this year. That's all I made. It was still. I still enjoyed it, but I came back and said, look. Most of the philosophies are out. In other words, a lot of what he said, we can almost second guess what he says. The other thing about Buffett is that he's become a lot more visible than he was in the past. He's always on CNBC, or he's always on Bloomberg, he's always on the channels talking, so we know what he's thinking. So when we get to the meeting, we can almost second guess what he was. But I think he's a wonderful. You have to admire his whole approach, and I think you can only learn by following his philosophies and looking at it. This is a shortened version of a presentation I made for that. But there's so much you can learn about the way that he, first of all, in life, the way that he follows life, and also about his whole investment approach. He's not perfect, but I think there's a lot that we can glean from his success. And you can see it there, you can see it on the chart.
Yeah. What I just want to ask, because one question he asks is like, okay, why do you still go there? You could watch that, you could download it.
I'll tell you exactly why. My daughter lives in New York, and I've got 2 grandchildren. So every April I go visit them, and I say, well, while I'm there, why not just go across the river? When I go to an investor value conference as well. And I can't share, I can, but I pick up an enormous amount from the value investor conference as well. And what I did pick up this year was that value investing, as we know, is kind of no longer as relevant as it was. It's not on the slide in that. So that's one of the reasons I go. And I think it's something as future investors, or if you are interested in the industry, if you can get out as much as you can, and listen to people, go to conferences, just go. It doesn't mean you're going to get from everyone, but you'll always find there's 1 or 2 speakers that you'll gather from. It's so important for you to go. You know what Buffett says as well? A person asked him a question and said, what are the 5 metrics that you use? What are the 5 metrics that you use to establish whether a company is a good company or not? And he looked at old Charlie. He always says Charlie's Old Testament. He's a cantankerous old man, very conservative. He's Republican, Buffett's Democrat. But when he was there, he said, you know what? He says, you have to understand, we've been reading and studying the market for 50 years more. He says, every time we read, it registers a little tick in our brains. And it registers a mark. So every day you're reading and learning more, that's all in your head. And sometimes something hits you, you decide, hold on a sec, this isn't a value, we think this is a great company, we read about it, we know the industry, we know the value, let's do it. So it's not done on spreadsheets or projecting 5 years forward. In any case, you project forward what you want to hear, so that you come back to the answer you want. You'll fix it. So their whole philosophy is based on reading. And when someone said, why don't you train a successor? He says, what's a successor going to do? Follow me to work. He says, I get to work, I pick up the FT, the Financial Times, or the Wall Street Journal, I read, I phone Charlie, I have a conversation, that's my day. Okay. That's it.